What's going on, everybody? It's your boy SoFly Trades here, and I'm back with another video. And today I just want to talk about how to beat FOMO, which means fear of missing out. Because today I had I had about, I'd say 2 times where I was about to get in a trade because I was scared I was going to miss out. And I just want to go over basically how to beat that, in my opinion. Well, what works for me, how to beat that. Um, so I'll just go over, what used to happen to me in the past. In the past, when I would have the fear of missing out, and not be patient, I would be in a lot of drawdown, which means as soon as I get in, the trade would immediately start going against me because I wasn't patient enough. And I would eventually, it'll probably hit my stop loss and stop me right out just to continue going in the same direction that I would want it to. But I'll just go over the 2 trades that I took today and how I beat FOMO um, inside of my first trade, really. My second trade, I literally just took that a couple minutes ago. It was a small scalp, only $21 on that one, but I'll take it. That's gas money. I'll take it. But long story short, let's get into this. I have SPY up here and I have SPX because I use SPX as confluence with SPY. Long story short, let's go. Let's get in our 1 minute on SPX. Okay, as you can see, they look similar because SPY follows SPX because SPX is the S&P 500. So when I trade SPY, I always use SPX as like a good confluence because it really helps a lot. It really helps base my trades, and it helps me hold longer too when I'm in a trade. But long story short, my first trade, so my plan of the day, you know, my plan of the day, give me 1 second. I called it out. I said I'll be looking for a push up into the supply zone or bounce off my key level of 393.51. As you can see here, I was looking for rejections up at this key level right here or my supply zone. That was my original plan, and that was the only plan I had initially. But what I love about trading is you have to be able to switch your game plans up, and take what the market gives you, because sometimes your plan won't play out. You know what I mean? So you kind of got to switch gears and still stay in that mindset, where you're not biased. You have to have an open mind, because if you don't and you like, okay, I'm only looking for this, then you'll miss a bunch of setups. I'm telling you that right now. You'll miss a bunch of setups waiting for your play to play out. Now, I'm not saying you shouldn't wait for your play to play out. You should. But if you see price action and you see that price action is hinting that we probably won't get to that key level no time soon, then you have to switch your mindset, digest what the market is giving you in that moment, and take it from there. But long story short, we didn't hit that trade. I was like, okay, we started trending down. I was like, wow, I wanted some buyers to come in, and I thought buyers might have come in right here on this bounce off of VWAP, but as we were trending up, volume was also falling off, so I knew buyers wasn't truly there at the moment. So that stopped me from really looking to get in up here because the buyers weren't there, the volume weren't there. So I had to switch up my mindset. Long story short, I seen us trail down. Till we I waited till we made this low. I marked out this low. And I also drew Fibonacci retracements in from, give me 1 second. I'll show you guys how I drew these fibs. I went on my 15-minute. This is how I find my levels too, intraday. Like if you don't have any levels intraday, this is how you can find your levels intraday. So what I did, as you can see here, what I did to get this 50% fib and 61% fib, I'll show you guys right now. In the pre-market, this is what I did. I took previous low to previous high because I was looking for rejections basically on an uptrend to go to a downtrend basically, because we've been, another thing, on our daily time frame and our weekly time frame, we've been extremely bearish. So my idea going into today was looking for some strength and then to short that strength, because every time we've went up this week, or it looks like we had strength this week, the sellers immediately came in and just started selling off, selling off, selling off. But you know, um, as I was saying, sometimes you got to switch up your mindset. And today looks like there were more buyers than sellers. So my exact plan didn't play out, but you know, it is what it is. That's why I love trading, because you got to be able to switch your mindset on the flip of a coin, basically. So this is how I drew my fibs. And I went from the pre-market low to pre-market high, which was right here, and boom. That gave me my 50% fib and my 61.8% Fibonacci retracements. And let's go back to my 1 minute time frame. I wanted to show you guys how I draw in my fibs. Let's go back to our 1 minute where I enter, and I'll show you guys the trade that I took. My first trade that I took. So long story short, short story long, I had this 50% fib drawn in here, as you just seen me do. And it, as you can see, it lines up perfectly. Like, we get a bunch of rejections. So once we basically pushed up here on lowering volume, and we had an increase, we kind of pushed above this level, but sellers were here, as you can see, this increase in selling volume. And once we basically push down, I got in. Once this increase in selling volume, once this candlestick closed, I basically got in right here. 390 puts down to right here. So long story short, I held all the way to down right here. And on, what was it? And that was right here on SPX. And like I was telling you guys, how I like to use SPX as a confluence to SPY, what I was looking for, because I seen we still had room to the downside. So I was confident in holding this trade. I was up, I sold about 2 contracts. I had 3 contracts left. Long story short, buyers started slowly stepping in, and I was holding. I thought we might, because I know we don't shoot straight down. We got to, pass a key level, then come up to retest it, then to go back into the direction we want to go. But that didn't happen. My stop loss was above this candle right here. Basically, that means if the price got up here, it would stop me out. But since I knew we were extremely bearish on our weekly and our daily time frames and our bigger time frames, your bigger time frames hold more weight, that gave me confidence to cancel my stop order and hold through this pain. I wouldn't say as much it was pain, because I was really confident, because just what the market has been giving us all this week, I knew eventually we would retest 390, because we only really tested it, what, 1 good time, 2 good times. I would say this was a test right here, but we fell below and reclaimed it. So that's not really a test. This is more of a test to me. We come, we don't fall through and stay through it. That's a retest. When you go to a level and you bounce off of it or rejecting it, that's what you call a retest. So I was looking for a retest of 390 to bounce up and reject off 391 to take back down to intraday low, our lowest point we've gotten to an intraday. That's why ideally that's where I wanted to sell, but that didn't happen. So I ended up holding all throughout this. And this is where I had the fear of missing out, aka FOMO, right here. So since my average, since I trade same day expiration, and the longer you're in your trade, if it's going against you, the more money you lose over time, just because of time. So long story short, I held all throughout this. I was at about $188 profit if I would have sold all my contracts, but I didn't. I held, because this whole week we've shot up and then tanked all the way back down. But long story short, I had the fear of missing out. Once we crossed this threshold, this 392.51, once we reclaimed this 50% fib, I was thinking about adding some more contracts to my position. you know, to basically get more money. But then I sat there and I thought about that. I was like, no, I'm already holding throughout this drawdown. I don't want to add more positions to, I don't want to buy more positions simply because that would add more risk to my trade. And then it would make me nervous because anytime I'm in drawdown and, you know, I start to add to my trade, I get nervous. So what I did was I just had patience. I said, okay, we made this previous high right here. I'll reset my stop loss right above here. I reset my stop loss and put it right above this key level. And I said, you know what? I'll just wait. I won't buy any more positions. I'm going to manage my risk. I'm going to stick to my plan and just hold these contracts because I know, we're looking bearish on our bigger time frames. So long story short, the key for me to beat FOMO is literally patience. Literally, anytime you feel like, oh, should I get in? I think I should get in. If you're thinking like that, if you're not like, okay, this is where I get in, I'm getting in now. If you're not thinking like that and you're thinking kind of everywhere, like, should I get in here? I'm not sure. And you start second guessing yourself, wait, just have patience because you start missing key information in the market that is giving you. Then you start making stupid mistakes. Then when you make one mistake, that one mistake turns into another mistake because you're like, oh, damn, it stopped me out by one tick. Let me get back in, let me double up my size on my contracts. Then it stops you out again. So now that's 2 times you've lost. And then you're pissed off because you're doing things wrong, but it's just like you don't seem to care because you don't want to lose. As traders, we don't like to be wrong, sometimes, but we have to accept that we're wrong. Nothing is 100% in this market. The market is manipulated by the big players, and we have to learn how to follow the big players. But long story short, I held for about an hour. As you can see, we trailed up. We retested. We broke below 392 and retested it. This is a break below and a retest. This is what you like to see. You like to see that. But as we started trailing up, you can see this small volume candles, the small volume bar right here on this bigger candlestick, which wasn't adding up, which means buyers wasn't really here, which gave me more confidence to hold. And at the same time, I was looking at SPX doing the exact same thing over here. We broke down. This would be my 392 on spot and broke right above and retested it and rejected it. And that's what I love to see. Long story short, I held all throughout. This drawdown. Boom, we started trending back up. I got slightly nervous once we started, reclaiming VWAP, but I was still confident because I had a plan and I was sticking to my plan. Long story short, we came up. Buyers started, as you can see here. Look at these volume bars. Look at these. This is what I'm telling you guys. This is how you see when the big money players are moving their money with these big volume bars. So long story short, we started trending down on increasing volume, which means which means sellers are really there. And once that happened, it was a sigh of relief, basically, because I was holding for about an hour. I got in my trade at around 7:15, 7:14, and I didn't fully sell until 8:11, 4 minutes shy of an hour that I was holding. But that trade netted me. Let's see here. That trade netted me $151. The only reason I lost $30 was because time. When you trade same day expiration, time is a big factor and it adds more risk to your trades. But I always trade same day expiration simply because I'm in and out the same day. I don't look to hold overnight, and I tend to try to get in at good areas. I don't get in when we're consolidating. Basically, when price is going sideways like this, I don't get in. I get in once we have a break above or a break below the key level and a retest of that key level. That's when I get in, because that's usually when the market makers and the specialists usually start to get in as well. But long story short story long, I'll go ahead and tell you guys about this little $21 scalp I had a few minutes ago. So as I was telling you guys in the beginning of the day, my original plan was a 393.51 reject. As you can see here, we started trending above, boom, broke above it. And we broke inside of my supply zone, and immediately we rejected it, started rejecting it. So once I seen that, give me 1 second. I'm trying to just find out where I got in. Once I seen that, I waited, basically. I waited. We trended back up. We were rejecting my supply zone in this 393 plenty of times. So once I got home, I seen this and I looked on SPX. Give me 1 minute here while I change this chart up really quick for you guys to show you. As you see here, this area right here would be my supply zone on SPY. And we rejected it. We kept rejecting. Kept rejecting in this area right here. I'll draw this in. Kept rejecting this area right here, as you guys can see. And after that, I took my trade right here. I did a 393 put. We came down. My stop was above this previous high right here. We came down, started trending up, and then we tanked below. But as we were falling below, I started to see volume starting to die off in the selling volume, as you can see here. And I seen these wicks, these long lines under our red candlesticks, which means buyers are down in this key area. And that area lined up exactly with the 21-day EMA on SPX. And I was looking to mainly get out around this area simply because on SPX, we tend to hold levels very nicely, which one thing I like about SPX, you know, it makes you trust your trade even more. But long story short, I took the trade from about right here to down right here. Only made a quick $21, but hey, I'll take it. Because at first I was up 151 and now I'm up $172. So I will take it, buddy. You know, and another thing, I was so close to holding this position with greed, because I'm like, man, I know we still have to trail down. As you can see here, well, I just want to show you guys something because the market is still open. As you can see here, we rejected this key level right here, and we're falling back below prior day close, which is this white line on SPX. If I was still trading, which I'm not still trading, I would have gotten in right here on this increase in selling volume, you know, but I'm done trading for the day. As you can see, look at this price action. The price action is crazy at this time of the day. It's 10:57 right now. Price action is crazy right now. But yeah, I just took a small scalp for an extra $21, you know, some lunch money, some gas money. But you know, I've learned every little bit adds up. Whenever I try to scale up too much, I always lose a lot of money. I always lose all my profits that I made in the week. So that's really what I've been working on, you know, following my plan, taking these small scalps and letting them add up. Because when I take those small scalps and let them add up, I'm more confident. I don't take stupid setups. You know, I just have on average a better day, you know, when I manage my risk properly. And that's the thing about trading. You don't have to be the smartest motherfucker. I'm sorry. You don't have to be the smartest person. You don't. You just have to have proper risk management. That's all you need. But other than that, I appreciate you guys for tuning in to this video. I just wanted to kind of explain to you guys how you can beat FOMO, the fear of missing out, with patience. Patience is key in life and in the stock market. Patience is key. There's a saying Warren Buffett has. He says the stock market is for, I'm sorry, it just slipped my mind. The stock market is for the people who are most patient. That's who the stock market is for. So if you're too anxious and too aggressive, you have to work on that. You know, you have to work on that in order to get better. But long story short, I appreciate you guys for tuning in, and I'll see you guys next week. Peace.